This webinar is probably our most registered webinar that we've done over the last 13 years that I've been running webinars. So it's obviously struck a nerve. My webinar is going to be a little bit different today than how I usually do things. Usually I'm all about pulling up some numbers and talking about different strategies and actions, and then showing how those actions have an impact on the profitability or cash flow in the firm. But I'm taking a little bit of a different approach today. I'm going to focus in on this particular issue and just really have a conversation about it. Because with this particular issue, I see it as one of the big contributors to law firms not achieving their profitability potential. And I say that because for the last 14 or 15 years, I've been specialising in working exclusively with law firms in the profit and cash flow space, as well as their accountant. And as a chartered accountant, I dive all into the numbers. And the numbers don't lie, but they also can tell a story when you look at what the key drivers are of those numbers and what the processes are in the business, and what those processes are and the activities of that business that actually drive those outcomes. And for me, one of the biggest disconnects that I see in firms is this disconnect between what are healthy processes in a business, in a law firm, in a professional services business, and indeed in any business. I see these unhealthy habits that are really inhibitive to producing good financial and economic outcomes. So I'm just going to have a conversation about that today and give you my insights. But I'm also going to do things a little bit differently in terms of your questions. So this webinar is not going to be as long as most other webinars. Usually they take somewhere between sort of 45 minutes to an hour. I should be done within about half an hour, I think, on this particular topic. But what I want you to do is if you've got any questions, please make sure you put them into the Q&A section, because I'm going to take the next hour out after this and I'm going to answer them all directly and individually, because I know the type of questions that you're going to be asking. There's not going to be any question that you pose to me about this issue that I haven't come across before with clients. Now, a couple of things to start with. First of all, everything that I'm going to be talking about today does not discount your responsibility as a lawyer for your professional duty of care and diligence in relation to managing your client matters and the work that you do for them. So that is still paramount. But what I see with firms is that I see the systems and processes that are largely driven by this issue of issuing itemised invoices to clients. I see time and time again that they drive the wrong outcomes in firms. So what are the outcomes? So the outcomes that we're looking for from itemised fees. What are the outcomes that we get from itemised fees are a number of specific outcomes. But to start with, what we see is most law firms design their financial strategies for the benefit of their clients, not their business. Now, I say that because most law firms and most systems in most businesses, actually, it's not just law firms, a lot of systems get created like applying oil to the squeaky wheel. They're designed to keep quiet or to deal with a minority of occurrences that generally don't occur, instead of looking at what is the right strategy, what is the right process and action for the business that produces good quality business outcomes. So the outcomes that you get from itemised fees often are these. First thing is you get fee earners that aren't entering all of their time. I see this there. I see a direct correlation between fee earners not recording all of their time for the work that they're doing, and therefore it can never end up in a bill. So the behaviour of time entry is very much driven by doing an itemised fee. I see at the point in time of billing a huge over scrutinising of time entries, to the extent that what it does, it takes days in some instances for fees to get done. It's the number of times I hear stories from firms where end of month billing happens over 2 days and everyone basically downs tools and does all of their fees. Well, if you've got 20 working days in a month, and you've got 2 days of those days doing fees which are not productive time, then there's 10% of the actual time that's available to do clients' work that's just thrown in the bin. So this over scrutinising really drives inefficiency. I often see with fee earners a delay in billing. So they delay billing because it's a reckoning day. They're concerned about having to be accountable to clients because the client's going to get a fee and see everything we've done or we haven't done. So I've already mentioned the non-productive time spent doing fees, which is one, that scrutinisation, but also where you've got fee earners doing fees. Billing is an administration function in a firm. It's not a function of doing the client work. And what you also get is you get inquiries from clients on time entries. What did you do for this amount? What did you do for that amount? That they're just some of the outcomes that I see in firms who produce itemised fees. And all of those outcomes are not conducive to good profitability, to efficiency, to good cash flow. So I ask the question, why do you do them? Now, to start with, you don't have to. So the only time that you have to provide a fee, detailed fee to a client is if they ask for one. So why do you do it? Do clients really want to know? I don't think so. Look, I'm a client of lawyers. I use my lawyers for different things, and quite frankly, when I get a fee, and if that fee does have an itemised bill, I don't look at it because I don't care. Most clients do not really want to know. Now, I say that because when you look at what clients are doing, they are making a purchasing decision. They've got an issue. Usually it's around conflict. It's always around conflict, but it's either around a conflict prevention strategy solution or a conflict resolution solution. So what they want to know is they want to know that you can do it. They want to know what's going to happen. They want to know what the outcome's going to be. They understand that they can't control that, but they want to know that that's what they're engaging you to do. If you go and buy a pair of shoes, or if you go and buy a new car, you don't get the details of every little bit of work that's been done and materials to manufacture those shoes or to build that car. You go and get a renovation done on your house. You don't need to know the details of every nail that's gone in there or every hour spent by the builder. It's just a normal purchasing decision. So purchasers do not need to know the details. And so, in my view, and I've got that many examples with clients that when they stop doing itemised fees, they tend to learn that clients really do not care. They really do not want to know. So again, my information that I'm providing you today is based on evidence. It's not just theory, because I have clients that don't issue. I encourage all of my clients not to issue itemised fees, and because in their instances they don't have the tight financial management systems within their businesses and processes that enable control of the outcomes. So another reason why firms do it is because it's always done that way. That's the way I was trained. That's the way we've always done it here. So let's just keep doing it that way, which is a pretty ordinary excuse, but one that often gets posed to me. Another one is fear. Now, the various legal services authorities around Australia love creating fear. Now, they have very much a place, and they are organisations that are required. However, clients have a contract with their lawyer, and the terms of that contract and the cost agreement sets out what they're going to do and how they're going to do it and what they agree to. It's important, as I said, as lawyers, you've got your duty of care, and you've got to always act in a professional way. But what I see in firms is this fear of being questioned around a fee, either by a legal services commission or even by a client. And they think the answer is just tell them about everything that they've done, and then they can't complain or won't complain. Well, it makes no difference. Look, if they're going to complain, they're going to complain. If they're going to lodge a complaint to Legal Service Commission, they're going to lodge a complaint. At the end of the day, you can only do your best, and you do the work and produce a good outcome for clients, and clients are then happy to pay. So this perception does not align to reality. In my experience, it is only a minority of clients that ever would really want to have a look at what detailed and itemised bills are. Now, there are areas of law where this is specifically not the case. So take, for example, corporate clients. Corporate clients, they have people that are focused on making sure that that they can scrutinise the detail of every fee that you provide them. But for most firms that I work with, which are in that 1 to 5 principal sized firms, they're generally working with businesses and people. They're not generally working within that corporate space. So I'm not talking here about the mid-tier and the higher end of town. They have a different clientele usually, but there are clients there are firms in that 1 to 4, 1 to 5 principal size space who do have those corporate clients where it is required. But for the vast majority of clients, they do not care. All they want is the solution. So the perception of needing to go and provide an itemised bill because a client wants to know, or we got to be transparent. The reality is, from my experience, they just don't care. But what it does, it creates a whole pile of wrong behaviours in the business that are counterproductive to producing efficiency, good productivity, good profitability, and good cash flow. And that's what I'm going to share with you now. Okay, so the first thing, if you've participated in any of my webinars before, you'll know that I live and breathe by 3 rules of strategic change, and applying these rules to anything that you want to do to get to produce different outcomes in your business. So the first thing is focus on what you can control. So for those of you who are familiar with the Serenity Prayer, I'm not a religious person, but this is a really amazing little prayer. Grant me the serenity to accept what I can't control, the courage to change what I can, and the wisdom to know the difference. Where most people spend their time in business is focusing on the things that they can't control. You can't control whether a client is going to query a fee. You can't control whether a client is going to react a certain way. You can control how your business processes work and what you do. You can control your terms of trade. You can control what the basis of how you engage your clients are, and how you manage that within your business. So the first thing, if you can just focus on what you can control, then you've got a chance of actually getting some sort of a strategic change. Secondly, is Einstein's definition of insanity, doing the same thing over and over again and expecting something different. So the second rule of strategic change is to do something different. If you want to change something, you got to do something different. But interestingly, the thing that you want to do different is only going to be the thing that you can control. Because if you're focusing on doing something different that is to try to impact something you can't control, you cannot have any sort of confidence that you're going to get a change. So do something different, but focus on the things that you can control. So those things that are within your world of control, and you'll get a different outcome. And then thirdly, focus on the majority. The Pareto principle, 80-20 rule, focus on the majority, not the minority. So the reality is that in most firms, most clients don't question fees, because fee inquiries are usually low in terms of when compared to the number of invoices that you actually issue on matters. So it's the majority of clients who are just happy to pay your fees that you're issuing them. So when you're going to focus on what are the actions that you want to take in the business to drive some strategic change, you focus on the majority. Your strategies and your actions that you implement need to be focused on the majority. So if that's in relation to your billing processes, then focus on the majority of those clients that don't question your fees. I can tell you that they're not questioning your fees because you don't because you issue them itemized fees. The reason they don't question your fees is because they're happy with the work that you're doing for them and they understand the terms of business. So if you focus on the majority and you do something different and you can control it, then in those circumstances, in those specific actions, you are likely to get a much better and bigger outcome than what you would if you're focusing and spending your time and energy on things that you can't control, doing the same thing over and over again, and just being reactionary to the minority. So remember these rules, because they're critical as we go through some of these other points that I'm going to run through now. Now, the other thing that you need to remember is what drives your outcomes. So if we're thinking about issuing itemized fees, what are those? What by the mere fact of issuing an itemized fees, why does it have such an impact on our outcomes? And what are those outcomes? Lower profitability, lower fees raised to clients. We're not billing them for all the work that we're doing, and so on. So let's analyze that and let's look at what a normal process is. So let's look at the outcome. What drives an outcome? So what drives an outcome is a behavior. So it's what people do, how they behave. So it's what they do in the business produces that outcome. So if the behavior is, let's look at three separate components. First of all, they're not putting all their time on a timesheet. Okay, great. So the behavior is I've got discretionary behavior that I'm able to make a choice as to whether or not I include all my time on a timesheet or not. So that's going to produce an outcome of lower fees because I'm not recording all the time I'm doing on that client's work. And what drives that behavior is the structure. So if the structure says you can have discretion, it's a loose structure. You can have that discretion on around whether or not you put time on your timesheet or not. That structure allows that, then you're never going to be able to improve your WIP recording output. So your fees are never going to be what they should be. But interestingly, if we explore structure in a different way, if the structure of billing, so if remember that your revenue is the WIP that you bill. Now, if you do fixed fee, it doesn't matter. It's all exactly the same. It's just how many hours were spent on that matter, and how much of it are we going to bill. And a fixed fee is just a methodology of billing, just like when you bill a time-based matter, it's the same thing. How much time do we spend on that matter, by what charge rate, and how much of it are we going to bill? So if your outcome, if your billing process is issuing a client a itemized bill, then what do you think that structure drives in terms of the behavior of the fee earner? So the first thing is, it drives a behavior of, I'm going to make a decision at the time of doing my work, whether or not that is going to be going into WIP because the client's going to see it. Now, what you're saying to all of your fee earners is just put everything in WIP, put it all in WIP, put it all in WIP. But the structure that you've got, enter it all in timesheets. By issuing itemized fees, you're then saying to your employees, put it on there. They're then going, well, I know a client's going to analyze it. I know the principal or whoever's going to prepare the fee is going to analyze it. So do I really value what I'm going to do? And what if the client complains? Am I being directly accountable to that client because they're seeing it? Oh, I'm just not going to worry about putting that extra hour on because I don't think it's billable. Well, wrong behavior. The behavior you want, if you want to fix your productivity numbers in your firm, which is people hitting their expected number of billable hours or chargeable hours into WIP every day on their timesheet, if you remove itemized billing and they know that the client isn't going to be scrutinizing it in detail with every fee, and if they also know, and I'll come to this point in a minute, if they also know that you're not going to be analysing and scrutinising every fee that goes out, and it's going to take 2 days to do all the fees, then your team members, your fee earners, are more likely to behave in a way that is conducive to time entry, which is what you're wanting them to do. Now, why do you want them to record time? Yeah, it's a methodology for how you calculate a fee. But basically, if you want to make decisions in a business, you need the empirical data. And as lawyers are trained around evidence and facts. You need to know exactly how much time was spent on a matter so that you know what your pricing should be, or if you've got inefficiencies in your business. So the outcome that you want to get of better time recording is definitely impacted by itemized billing. So if you remove itemized billing, you then have a better chance. They've still got to record all their time. You've got a bunch of other things you've got to do to encourage that and train and educate the context of that. But you've got a better chance of getting improvement in productivity. Secondly, if it's about scrutiny at the time of billing. So if they're putting their time in and then there's write-offs that are happening on bill, how do you think that makes a fee earner feel? So if they're feeling that I'm doing this work, but it's not getting billed to the client because we're not justifying the amount because the client's we've got to justify the amount to the client, then a fee earner is naturally going to sort of focus away from recording all of their time because they know it's just going to get written off anyway. So this itemized billing function of a business creates this opportunity for the one thing that you must have to drive improvement in revenue, and that is better time recording, to be achieved. So from a billing point of view, I always encourage my clients to say, if it's in WIP, you bill it. You know, if you've done an estimate and the time's approaching that estimate and it's going to go over, it's out of scope or over time, re-engage your clients, manage that relationship all the way, but do not let your fee earners raise fees. They should not be billing. Billing is an administration function. So whatever time's in WIP, if it's within the estimate, it gets billed. If it is approaching the estimate, then the process in the business is to re-engage clients and reset the estimate so that you are able to have billing as an administration function that enables that bill to be sent out. Now, if you do that and you're just doing a one-liner fee that says fees for services rendered on your matter for this period, as an example, here's the total amount, and it gets approved and issued to a client because it's all within the estimate, and on the basis that you are employing your people because they're competent people, and that the charge out rates that you are applying to them are representative of their level of experience and skill. Higher the charge rate, the more skillful generally and experienced a lawyer is. And that's your business model. That's just how the numbers are calculated. That's what the client pays for. That's what they've signed off on a cost agreement for. Then administration can raise fees and automate that process to reduce that 2-day billing pain at the end of every month. So another thing that really drives this behavior is this. So what people think, your thoughts, your perception, what you believe to be a reality is what you think. What you think drives what you feel, which drives your behavior. And what I challenge firms with, and particularly principals in firms, I challenge them on whether their thinking is right. So firms, I hand on my heart, and I can guarantee to firms that when they've got all of their other systems and their systems are working and they're engaging their clients properly and they're re-engaging them around their fee estimates, I can guarantee that by not issuing an itemised bill to a client, that your number of fee inquiries don't actually change much. They might actually go down. Your number of fee inquiries are going to be low anyway because most people don't inquire about a fee. And when I don't mean complain, I mean inquire. Most fee contacts are made around understanding and a query, not as a complaint. But if the attitude is we believe that we must be transparent to our clients and be accountable to our clients for every minute or every 6 minutes that we're spending on clients, and we overanalyze everything as a result of it, even though the client signed a cost agreement, if we believe that, then those thoughts create that feeling of sometimes it's fear, sometimes it's lack of value of what we do because we think we're selling units of time where we're not, we're selling solutions to clients. Then those feelings drive that behavior which produce that outcome. I can tell you that clients are not price sensitive. In areas where you have got visibility around pricing, like conveyancing and simple wills, clients may look and compare prices, but there is no price comparison that can be made for a complex or any matter that's based on resolving a client's conflict issue or preventing it where it's causing the client pain and unrest and lack of peace of mind. So you can't go and compare it like you can compare two shoes that you're thinking about buying. Price is not an issue for clients. They already think you're expensive anyway, because that's what the world thinks of lawyers. Generally, they've made their mind up that they're going to work with you anyway before they meet with you, because most work that lawyers do is around repeat business or referrals. So the first thing that I can suggest to you is if you're going to be discounting your work to them by not billing them for everything that you're doing, and you think that you've got to be transparent with them to give you the details of everything that's in there, which drives all of these bad behaviours, then you're wrong. Clients do not think like that. That is not the reason that they work with you. The reason that you issue an invoice like that is because you choose to. So what are the rules? As I said, you must provide a client with an itemised fee, but only if they ask for one. So why make it the primary basis of issuing a fee? There are next to no other businesses that provide itemised fees, and that is in the professional services world. The ones that do in the professional services world do that have exactly the same issues when they're dealing with a similar sort of client base that might be business to business or private clients. As I said, commercial worlds are different. The corporate world's a different world, but you don't have to. So don't. The law doesn't require to. You still got to make sure all your timesheet entries are done, that you're able to provide one and you need to be able to review that. You're not got to make sure that your people have appropriate systems that they're following to make sure that the fees that you're providing are appropriate. That's your professional duty of care, but you don't have to provide one, so don't. So here's the myths. Clients are fee sensitive. I mentioned that before. And often this issue of raising an itemised fee for a client is because they think clients, if we're just transparent, if we just show them everything that we do, then that's going to solve this sensitivity. Well, clients aren't fee sensitive. And I think a lot of professionals, a lot of solicitors, a lot of principals are fee sensitive, and their clients then get that vibe that price is an issue because you talk about it. Well, it's not. They think you're expensive, so bill them accordingly. Secondly, is that I don't get many fee inquiries because I issue an itemised fees. Well, you don't. That's rubbish. Most people look at it and their reaction is, oh, God, I've got all this work. What do I need to know that? But, they're billing me for all of this, a phone call or an email, if they do read it. But they don't. What you're billing them for is the solution, the work that you're doing to help solve this issue for them around conflict prevention or around conflict resolution. So remove that, and it won't make any difference to what you do. So they're myths. Okay, so just to recap for you, what I see the itemised, where we've got firms that have got the standard traditional process for how fees get prepared for clients operating in their businesses, which is fee earners raise fees. Fee earners then issue a fee for approval. Those fees are itemised fees. The principals scrutinise the itemised fee to determine what they're going to write off, and then the itemised fees are sent out after approved by the principal. They might get sent out by admin, but admin don't really do anything too much in terms of the determination of the fee or following the business process around what they should be billing. And that's the normal practice. So my challenge to you is, if that's your business, remove your itemised fees. No longer do it. What you need to do is you need to engage with your team around why time recording is important. And it's important so that you can understand how much time is spent, to understand if pricing is right, to make business decisions on empirical data. 2, you need to turn billing into an administration function so that your processes are, for monthly fees that get issued, they are issued based on the WIP that is in there. And that WIP is always aligned to the estimates that are in your system. And your clients are re-engaged by the fee earner as they're going through on a weekly or fortnightly basis, where that WIP and that's been added for the work is starting to get close to that fee estimate, and that they're going to go over it in a material way. It's an estimate, it's not a quote. And then you have your administration team raise the fees for approval. They can still be approved by the appropriate people in the business, but they should not be written off. Clients are contracting with you to do that work, so you need to bill them for it. Most revenue growth that can occur within your firm does not need to come from existing matters. It comes from making the money for the work that you're already doing. It comes from your existing matters. There is, at least in most firms, 20% of revenue increase that can come from existing matters by changing your systems in the business to produce productive processes that produce the right behaviours around time recording and billing and engagement of your clients that will drive profit improvement. So what you need to do is you need to implement. You need to do something different. You've got to focus on what you can control. You've got to focus on doing something different. You've got to focus on the majority. So what is it that you can control? You can focus on what's your invoice. You can choose to raise an itemised fee or not. You can choose just to do a simple fee. You don't need to write covering letters explaining things to clients. God, it's just an invoice. That's all it is. Make it easy. Make it able to be almost press a button, invoice gets issued, money can get in the bank, get out of the road of getting cash in the bank. So you can choose, you can control what goes on your invoice. You can choose to change up your billing process to remove fee earners from that process so that they can get back to doing client work that produces more revenue. So you can make that a billing process. You can actually change your mindset around billing. You can say, I'm going to bill for the work that I'm doing. The reality is the firms that make the best profits are the ones that have smaller numbers of matters at a higher average matter value. Often there's a lot of work that firms do that they shouldn't be doing because they just can't make any money out of it. It's because they're choosing to do it. So what can you do differently? You can stop issuing itemised fees. You can make billing an administration function. So you can do both of those things. If you do them, hey, you might just get a different outcome, but you're also doing things that you can control. You know, if a client rings you and says, why have I got an itemised bill? You can say, well, we just don't issue them anymore because we're streamlining our processes. Alternatively, for all existing matters that you've already got, you can write to them at the time of doing the next fee or when you make the decision and say, moving forward, we're not going to be issuing any more itemised fees, but please know that you're absolutely able to request one and we will provide it to you if you require. No one will respond to that. No one will say, make sure you send one. And if they do, that's okay. It's going to be a minority, not the majority. And what applies to the majority of your invoices and your simplification of billing applies for all clients. The majority of your clients, as I say, do not care whether they get an itemised bill or not. So stop creating business process that absolutely drives inefficiency in your business because you don't have to. Yes, you do have to provide them with an itemised fee if they ask for one. But no, you do not have to bill. Every bill does not have to be an itemised bill. So some food for thought for you. A lot of the work that I do with firms around profitability and cash flow is looking at these underlying systems and what's happening in a business that's driving the behaviours that aren't conducive to good profitability and cash flow. And as I said, this issue of issuing itemised bills to clients often create a whole lot of additional administration in a firm, create a whole lot of distraction, and also create a whole lot of unproductive processes and unproductive perceptions from fee earners and principals, which don't need to exist. So again, look at what you can control, focus on what you can do differently, and then apply it to the majority. So guys, I hope that was of some value and benefit today, just to take on my view. As I said, it's not theory. This is based on facts that I see in clients where they go and implement and stop issuing itemised fees. They are very pleasantly surprised, and I sometimes do say, I told you so, that it has no bearing on clients. It makes it so much easier to issue a fee for what's in WIP. It's so much easier. It takes away barriers in the business for getting more time into WIP. So only positive outcomes. As always, if you'd like to organise a no obligation free 45-minute online meeting to discuss your billing processes or anything else in the that relates to your business, first five to email me at matt@fwaca.com.au. We'll get that scheduled in. Also, if you have any remaining questions that you'd like to pop into the Q&A section, please do so now, because I'm going to grab sandwich and respond to all of those questions straight after I sign off from the webinar. So thanks again for participating, and see you soon.